Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro technicals, and crystal ball gazing. Today is Wednesday, November 6th, 2024, the day after the U.S. elections. If you're tuning in, it's likely you're wondering, hey, Robschild, your TLT's not doing so hot today, is it? Yeah, no, it went down in price, and therefore it's more attractive to me. And that's it in a nutshell. We'll maybe get into a few more details regarding that. The market was just nuts today, just bonkers. Predictively so. You're going to have all sorts of players with all sorts of thoughts and emotions in their head about what's going to happen with America now because of the elections and, who won. And, it is notable that all three branches of the U.S. the U.S. federal government now are controlled by Republicans, and so we will see a large amount of deregulation and a lot of changes. So, yeah, the market just went nuts today, and there was a lot of things that actually didn't make sense. There are a lot of divergences between markets that are screaming very different things. But all in all, I would describe today's meme market day as a situation where one should take it with a large cup of salt. Not a grain of salt, a cup of salt, because things just went absolutely bonkers today. I am more interested to see what happens tomorrow and the following week to see, where things will be panning out and, making their way in what direction. A day like today, cup of salt. Take it with a cup of salt. That's what I'm doing. Don't actually do a cup of salt. That wouldn't be healthy. But you get the point. The way I imagine it is that Mr. Market's emotional backseat driver sort of took control. Mr. Market forgot he even had somebody back there, and he woke up and started, all of my talking about Mr. Market driving wrong way down the highway, being all crazy. And that's how I see today. The backseat driver woke up and took control. He's grabbing the wheel and yelling at Mr. Market. Things were nuts today. But all in all, what did happen and what are these divergences I'm talking about? So let's start with things that went up. SPY, IWM. So these are stocks. Generally speaking, the small caps and the big caps went up in price today. Sector by sector, there were some interesting things going on, but I'm not going to get into that, at least right now. Also, Bitcoin went up and the dollar went up. So there's your first divergence right there. You have Bitcoin, IWM, and SPY saying, okay, risk on. Then that would normally mean maybe the dollar cools off here, but instead the dollar is going higher. Now, what about things that went down today? TLT, Treasury bonds. Gold went down, silver went down, and even copper went down something around 5% today. So what's the deal? Is inflation coming? Well, inflation is coming is what some markets are saying. TLT is saying inflation is coming. SPY is saying inflation is coming. Small caps and Bitcoin are all saying inflation is coming. That's why they went up in price. And then, and TLT went down in price. Sorry. And then we have another group of the market saying deflation is coming, says gold, silver, copper, and the dollar. The dollar rising, copper, silver, and gold going down in price. So what the heck is going on? My answer? I don't know. All the markets went haywire today. I'm telling you, Mr. Market, there was a backseat guy that just jumped up on top of Mr. Market and grabbed the wheel, and we'll have to see what's coming next. Now, regarding this inflation thing, well, what does the market say? Unfortunately, the 10-year break even, which is my favorite inflation gauge, only updates through yesterday. I spent some time trying to find something that updated on that's more updated for today, but as of the 5th, we've been declining in inflation expectations, currently at 2.27. So, yeah, and this is for November 5th. This is for yesterday. So, tomorrow, after the close, is when we get today's break-even inflation rate. If someone has a faster way of seeing a more updated version of this and wants to put a comment, please do so. I'd love it. I'm very curious to see where the break-even inflation rate came out today. But longer term, let's sit on our hands. Let's see how things pan out. So the election really made things go haywire. Do the movements today have any legs to them? Will they continue in those directions? We'll look into some details of some charts in a second. Before we do that, I wanted to note that tomorrow we have the FOMC decision and 2:30 Powell talking. My crystal ball says that maybe Powell will be willing to reveal some things that maybe they were revealing previously. I'm going to listen to his full speech when I have the time tomorrow. I think this is going to be one of the more important ones, could be a pivotal moment. And then, of course, we also have initial jobless claims, which, if it comes out really high, if this spikes up for whatever reason, that could shake things up, maybe more so than the election. And then my biggest stock holding, we have Nissan earnings coming out tomorrow on Thursday, although I don't know what time. But the price was likely to go way up or way down. I don't see how it could go way down considering how cheap it is, but we'll see. Not much what is there to have changed in my daily reminders? Not really anything. With the S&P 500 going up significantly, we're back up to a PE ratio of 30. We were at 29 yesterday, but none of this has changed. Again, if you want to hear me read through and explain all of the daily reminders, please watch Monday's show. I read through them only on Mondays now. Mostly because I'm tired of hearing myself say these things, but they are daily reminders. These are things that need to be like the core of your brain, at least I think they should be. Remember, guys, no investment advice. You're watching a guy that thinks he can predict the markets with a crystal ball. Just, always remember that part. But with these things in mind, the crystal ball reading remains. The S&P 500 is currently priced like it's a Ponzi scheme, relying on other people to spend more on it than you did yesterday in order for the price to stay at where it is and continue higher. I believe there is a bear market imminent, and I also do believe that the Fed won't cut fast enough to save the economy due to a fiscal dominant situation. We will jump right into the charts momentarily, but before we do, always a big thank you for all of the support. Support the channel any way you please. Much appreciated. On to the charts. Let's make this a full screen. We have the SPX, the SPY, the S&P 500. It's actually hard to see this green candle because of how much it went up today. 2.5% in one day in the S&P 500. Amazing, getting to 559.29 at the close of the day. At this point, the way that I'm reading this is that we are pretty much guaranteed at this point to at least get to that 6,000 number. In a number of shows ago, I mentioned how me and everyone else kind of wanted it to get to that 6,000. It's just like a psychological number. It's like I don't know, watching paint dry, and just for that last moment, it's finally done. And I think, according to some chartists I listen to, they believe that there's a pretty decent chance that the top will be actually at 6,000 or 6,100. And this has to do with, I believe it's a logarithmic chart dating back 100 years, where we're bumping up against this line. Watch Verified Investing to check it out, or just take a look at the logarithmic chart of the S&P 500 yourself. You might be able to find it. I'm not going to pull it up today, but that's where we get that 6,100 number. And the next chart I want to pull up is actually CME Group Fed Watch. Their graph is of course, messed up again. Somehow these numbers got shifted over. Someone seriously needs to reprogram this thing. This thing has errors like every other time I look at it, I swear. But anyway, I digress. The point here is that we only have 4 cuts priced in now, before we get to the current priced in terminal rate. And I don't believe personally this will be the terminal rate. Again, it has to do with the fact that I think that the cuts are going to be less effective at getting the economy rolling again. But I find it very notable that our terminal rate now, target, the Fed funds rate is between 375 and 400 basis points. Moving on to more charts, I'm going to go through actually the charts that surprised me maybe the most today. We'll actually start with the VIX. This is the pricing of options contracts. I mean, I understand that there is and people have been saying this before the election. They were like, this is what happens, once we get the election, then we have surety, and then people can relax and be like, okay, this is how things are going to be now. And so the VIX cooling off, with the humongous move up in the S&P 500, and this being the volatility of the S&P 500, this is very odd to me for the VIX to drop by, 20% down to 16. I mean, this is still, in the upper range of the VIX. When it's above 20, that's like high volatility. For us to drop down here, I don't know what to make of that other than, take it with the cup of salt that I talked about earlier. It doesn't make sense to me for the price of options to suddenly get cheaper after a huge move like that in markets. So, gonna keep our eye on it. While seemingly very important markets are jumping, just getting all over the place today, crude oil, barely budged. We went up by 1%. We're still well within this down trend. If you didn't tell, do the people that trade oil not know that we just had an election? Well, that's what I'm saying, is to take everything with a grain of salt. The oil market certainly did. They took the whole cup of salt. They said, oh yeah, there was an election yesterday. Oh, so what? Gas is going to be double the price tomorrow or half the price? No. Nothing's changed. Nothing's changed. And that's what oil said. Oil went sideways today. So I find it very notable and almost strange, right? With everything else jumping around like crazy, oil's just like, meh. So those were a few of the other major charts. The rest of them I've pretty much already mentioned, but we'll go through them anyway. Starting with DXY, the dollar rising 1.6%. I said yesterday how we were in this bull flag looking thing, and I didn't know if it looked like it was rolling over. But yeah, huge pop up to the upside, dollar to the moon, I guess. Very odd considering that, stocks are also going up so much today. One other piece I wanted to add to the Fed funds rate and the terminal rate being between 4 and 3.75. Take a look at the lowest yield right now across the curve. It's at the 3-year, currently sitting at about 4.11, which is still above the Fed funds target. And so it is saying that, okay, within 3 years, this end is probably going to drop below this 3-year. And I'm just bringing that up because it does seem like even with there being only 4 cuts priced in, we are headed into reversion or reverted state, no longer inverted on the yield curve. The longer the yield curve stays inverted, typically the worse the recession or depression can be. So, and I'm still thinking we're headed there. I'm in the deflation camp. Well, Robschild, if you're in the deflation camp, you must love TLT right now. Yeah, I mean, it did. It went down in price significantly today. TLT, the fund of long treasury bonds, dropping by 2.74% today. A little bit of technical analysis. If we just take these 2 recent bottoms and connect it, that was that connects to the bottom of today's candle, suggesting that we are still in a formation that's referred to as a falling broadening wedge, which actually typically does, believe it or not, break out to the upside. I thought the wedge was pretty much done forming to the downside, and it looks like that hasn't happened yet. So yeah, most patterns are best seen in retrospect. They're most clear in retrospect. When like even Head and Shoulders, like, oh yeah, look at that. That was there. It was yelling at us the whole time. Anyway, on a short-term basis, this is what I see. Again, with all of the disagreements in markets, like I don't know where, if trends will change because of the election. Maybe. I don't know. I think Mr. Market just kind of lost his mind today with that backseat passenger waking up. I bring up the chart of copper today. If you've heard other people talk about copper, they often refer to copper as Dr. Copper, who has a PhD in economics. And so if copper's dropping, that supports my idea of a deflation. This is saying deflation. So if you believe Dr. Copper, he's on my side of the argument, at least temporarily, at least for today. Again, with all these divergences in the market, you got to take it with a cup of salt. I'm just going to repeat this apparently with every chart we go through today, because I think that's the main message. But let's move on. Bitcoin skyrocketing today to 75,600. I had mentioned in one show a while ago that if we closed and confirmed above the $75,000 level, in other words, we have like a closing day and then another close that closes higher than the previous day that closed over 75,000, maybe I'd be willing to try to ride the wave up to 100,000. I'm no longer in that camp. I'm not doing it. I can't do it. It's just too risky for me. I don't chase momentum. I'm not going to do it. But it's fascinating to watch, like a fireworks show or anything else. I should have put this earlier in the video. This is the move index. Very interestingly, this is the wrong interval. We want a daily interval. So this is the move index. This is the volatility of bonds. Now with bonds dropping, the TLT itself dropping 2.74% today, the move index also dropping by 10% today. This is another, like, what the heck? Apparently there is less violent movement now expected in bonds. All right, Mr. Market, whatever you say. It doesn't make any sense to me. Again, let's see how it pans out over, tomorrow, the next day, the next 2 weeks. Let's give the market 2 weeks to see where we're really headed, to see if anything's, really changed because of this election result or not. My guess is not. And then, sorry, I wanted to save that one for last, actually. The next one is gold. And yeah, I accurately said literally yesterday we had a bear flag suggesting gold would go to the downside just from a charting standpoint. And I did not expect or bet on gold dropping 3% today. A very large move down in gold. So the gold market by itself, I know I turned red again, by the way. Sorry about that. I'll get control of this light someday. Anyway, so the gold market saying, we're not so worried about inflation anymore. We'll cool off our price a little bit. By itself, that's what it said today. All while treasury yields spike. Nothing made sense today. Same thing, obviously, in silver, and I did mention yesterday silver as well. We had this bear flag, and then dropping 4.5%, along with copper, being semi-precious, semi-industrial metal. Absolutely fascinating to see IWM, or the Russell 2000, going up by 5.8% today in one day. That's like a historically large move in the Russell 2000. And Mr. Market apparently thinks, wow, well, hey, I guess, certain people are now in charge of government and that's pro-business, so now we're less worried about the valuation of small companies, I guess. So, all right. Let's see how it pans out again. Moves like this, by the way, can and often will like just go exactly down exactly the same amount by the same amount the very next day, but I have no idea where this price is going to go. Mr. Market is just, yeah, he went bonkers today. Let's see what happens next. And then SMH, the semiconductor industry, very interestingly, to me especially, we went up by 2.6%, which is not the largest move in the semiconductor ETF SMH. And in fact, if anything, we're kind of retesting this recent breakout line of the breakdown of the rising wedge. I still believe with my money, I am short SMH still with SOXS, triple leveraged short against the semiconductor industry, because I believe there is too much speculation priced into this market. As I always like to say about it, trees grow tall and they don't grow forever, and Mr. Market never learns. So we always end up in a bubble when we have a new exciting industry, and that's what I see here. So I'm still short here, and I'm expecting it to play out to my favor. Last chart to bring up, MSOS. This is a cannabis ETF. I mentioned in previous shows that I literally bought like the very bottom of this thing twice and got hugely rewarded for it. Considering, I mean, I'm not going to lie, considering the powers that be, we'll call them, yeah, might be a good market to try to stay away from a little bit. We hit that exact same low, by the way, as the all-time low today in this fund. But I'm not playing around with this one anymore. I've made money on it, and I'm happy with it, and I'll let it sit maybe until we see further development in the regulatory area. It might take 4 years. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.